Assalamualaikum. My name is Nur Jana. Before we are going to discuss about the trend analysis, as an introduction, I'm going to present the background company and core activities of Nelayan Banking Berhad Maybank and CIMB Group Holdings Berhad CIMB. Both are the two of Malaysia's largest and most influential financial institutions and the broader Asian region. Founded in 1960 by Malaysian business tycoon Khoo Teck Puat, Maybank is the first homegrown bank in the country. It was established with the primary goal of providing accessible banking facilities to local enterprises and individuals, a market underserved mainly by foreign banks at the time. Headquartered in the iconic Menara Maybank in Kuala Lumpur, the bank has grown to become Malaysia's largest company by market capitalization and the leading financial services group in the nation. Maybank's core mission is humanizing financial services, which emphasize providing simple, intuitive, and people-centric financial solutions. The bank's operations are structured around several key business pillars such as group, community financial services, and group insurance and takaful. Through its Etika brand, Maybank is a leading player in the insurance and takaful, which is Islamic insurance market, offering both life and general insurance products. The group Islamic banking, Maybank is a global leader in Islamic finance. CIMB Group origins can be traced back to the establishment of Pertanian Barang Sanwar, multinational bank in 1974. The bank, as it is known today, was largely shaped by the acquisition of Bumiputra Commerce Bank, which created a universal banking group. Headquartered in Kuala Lumpur Central, CIMB has established itself as a leading focused Asian bank and a premier regional corporate advisor. It is also a world leader in Islamic finance. The group's core activities are organized into several key segments. The first is consumer banking, such as deposits, loans, credit cards; wholesale banking, which is a significant strength for CIMB, encompassing investment banking, corporate banking, and treasury and markets. For group strategy and strategic investment, this division focuses on the bank's regional growth initiatives and strategic investment. For Islamic banking, through CIMB Islamic, the group offers a comprehensive suite of Sharia-compliant products and services. Now, we are going to analyze comparison of liquidity ratios between Maybank Berhad and CIMB Bank Berhad. Liquidity ratios consist of current ratio, quick ratio, and loan to deposit ratio. Based on the analysis, therefore, these low ratios do not inherently indicate a liquidity weakness, but rather reflect the unique operational nature of financial institution. Both banks demonstrated general stability in their liquidity positions, with Maybank typically maintaining slightly higher ratios than CIMB, possibly indicating a marginally more conservative approach to traditional liquidity management, or possesses a different mix of highly liquid assets relative to its short-term liabilities compared to CIMB. The loan-to-deposit ratio (LDR) is classified as a liquidity ratio. The LDR measures the proportion of deposits that are lent out as loans. It serves as an indicator of a bank's ability to fund its lending activities using its deposit base and is key to assessing liquidity risk. Maybank's loan-to-deposit ratio (LDR) remained within a healthy range throughout the period, indicating a balanced liquidity position. The 2024 LDR of 90.7% demonstrates good asset liability management and depositor confidence, according to Maybank Annual Report 2025.
Hi, I'm Nurul Atika binti Mak Yasin. I'm going to present comparison of liquidity ratio of Maybank and CIMB. According to account receivable turnover ratio, fixed asset turnover ratio, efficiency ratio, cost to income ratio. According to account receivable turnover ratio, Maybank ratio tend to be about 0.3 to 0.4x higher than CIMB, which might suggest a marginally faster conversion of receivable into cash. According to fixed asset turnover ratio, this comparison highlights that although both banks have improved operationally, a higher fixed asset turnover ratio suggests that a bank is efficiently using its long-term asset to produce revenue. CIMB might be generally slightly higher net sale per unit of fixed asset, illustrating difference in asset utilization strategy and operational efficiency. According to cost to income ratio (CIR), analysis showed that from 2020 to 2024, Maybank Malaysia started with a lower and stable cost to income ratio around 45%, but experience has increased to about 48.9% in 2023 to 2024. Indicating rising cost pressure relative to income. Meanwhile, CIMB Malaysia improved its efficiency dramatically from 52.2% in 2020 down to around 46.7% to 46.97% by 2024, demonstrating effective cost management over the period. Despite Maybank's initial advantage, CIMB's significant reduction in CIR over the first few years and its utility level in the latest period highlight that CIMB operational efficiency unlimited outperformed.
Assalamualaikum and a very good day to everyone. My name is Uitm Arau and today I will be presenting a comparative analysis of the profitability ratios of Maybank and CIMB Bank for the financial year of 2020 to 2024. To begin with, profitability ratios are crucial indicators used to assess a company's abilities to generate earnings relative to its revenue, assets, and equity. These ratios help evaluate how efficiently a company utilizes its resources to produce profit and delivers a return to shareholders. Among the commonly used profitability ratios are gross profit margins that indicates how efficiently a company is producing its goods or service by measuring the percentage of revenue that exceeds the cost of goods sold. Following that is the operating profit margin. It shows the percentage of the profits generated from the core business operations before interest and tax. The next is the net profit margins that measures how much the net income is generated as a percentage of revenue, reflecting the company's overall profitability after all expenses. In this presentation, I will compare these three key ratios between Maybank and CIMB analysis, their trends from 2020 to 2024, and provide insights into which bank has demonstrated stronger profitability performance during these periods.
According to return on asset (ROA) and return on equity (ROE), from the analysis, both banks experienced a rebound in profitability post-2020. CIMB demonstrated a more significant percentage improvement in ROA and ROE from its lower 2020 base, which ROE rising from 2.1% to 11.2% by 2024, reflecting better asset utilization and profitability growth. Maybank return on asset (ROA) demonstrate a strong recovery from 0.8% in 2020, stabilizing at 1.0% in 2021, 2023, and 2024, with a slight dip to 0.9% in 2022. This consistent performance indicated an efficient utilization of its asset base to generate earnings, particularly during the post-pandemic recovery. The bank showed a commendable and consistent upward trend in return on equity (ROE), indicating stronger profitability. According to net interest margin (NIM), from 2020 to 2022, both banks demonstrate a healthy and growing net interest margin, with CIMB consistently maintained a slightly higher NIM than Maybank. This suggests that CIMB was marginally more efficient at generating profit from its interest earning asset during this period. 2023 marked a turning point for both banks, with a notable contraction in their NIM. CIMB NIM saw a much sharper decline compared to Maybank, indicating that Maybank was more resilient to the adverse market conditions of that year. In 2024, while Maybank NIM continued to trend slightly downward, CIMB NIM showed a modest recovery. Despite this, Maybank maintained a higher NIM than CIMB in 2023 and 2024. In conclusion, both Malaysia and CIMB have experienced fluctuation in their profitability over the past 5 years, primarily influenced by the prevailing interest rate environment and competitive pressure.
The analysis shows that from year 2020 to 2024, Maybank Malaysia's gross profits margin has remained stable, indicating consistency in its cost structure despite potentially fluctuating revenue streams. Meanwhile, CIMB Malaysia has made a notable improvement from a lower base in 2020, gradually enhancing its operating efficiency to emerge with a higher GPM by 2024. These trends reflect each bank's strategic emphasis, Maybank's on maintaining steady performance and CIMB's on actively driving operational efficiencies to capture more profits from its revenues. Next, Maybank's operating profit margin appears generally stable over the period, but with less dynamic movement than CIMB. An early post-pandemic boost in 2021 may have been offset by higher recurring operational costs or reinvestment in digital and customers' experience platforms in subsequent years. By 2024, the data suggests that CIMB has managed to maintain this efficiency advantages, making a strong case for its productivity in converting income into operating profits. The analysis shows that from year 2020 to 2024, Maybank Malaysia's gross profits margin has remained stable, indicating consistency in its cost structure despite potentially fluctuating revenue streams. Meanwhile, CIMB Malaysia has made a notable improvement from a lower base in 2020, gradually enhancing its operating efficiency to emerge with a higher GPM by 2024. These trends reflect each bank's strategic emphasis, Maybank's on maintaining steady performance and CIMB's on actively driving operational efficiencies to capture more profits from its revenues.
Hi, I am Siti Zubaida binti Mahdi. I am going to present comparison of leverage or debt ratio of Maybank and CIMB for 2020 to 2034. Leverage or debt ratio consists of debt ratio, debt to equity DER, and times interest earned DIE. The leverage ratios analysis showed that both Maybank and CIMB exhibit high total liabilities to total asset ratios or debt ratios, consistently above 89% for Maybank and 90% for CIMB. These high ratios are typical for bank and are a standard characteristic of the banking sector, where customer deposit form the bulk of liabilities and are essential for funding asset. The stability of this ratio for both banks suggests a consistent funding structure. Similarly, their debt equity ratio are high, ranging from approximately 9 times to 10 times for both institutions. Maybank and ratio slightly increased while CIMB remain relatively stable. The consistently lower DIE ratio for CIMB hint at a more leveraged operating model, while a more aggressive use of debt can amplify return in favorable conditions. It also creates a tighter cushion when earnings are under pressure. From the estimate above, Maybank appeared to have a somewhat lower financial risk profile related to interest expense servicing compared to CIMB over the 2020 to 2024 period. The analysis of Maybank and CIMB Malaysia financial performance from 2020 to 2024 revealed a resilient and evolving banking landscape in Malaysia. Both institutions effectively navigated the economic uncertainties of the pandemic era and demonstrated a strong commitment to enhancing their financial health and operational efficiency. CIMB Group demonstrated a more pronounced recovery and growth in its profitability margin, particularly in its net profit margin, which expanded significantly over the period. This was driven mainly by a consistent and impressive improvement in its cost-to-income ratio, indicating strong cost discipline and operational efficiency gains. CIMB absolute operating income also showed robust growth, reflecting a healthy expansion of its core banking activities. Like Maybank, CIMB's leverage ratio are characteristic of the banking sector, backed by robust capital position.